Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently so many of you have asked me to look at one specific company and I haven't had the chance to look at it up until this week, so I'm going to share this with you today just to kind of give you an overview. But obviously you're going to have to do your own research, find out a bit more information about the company. I'm just going to give you an overview what the company does and the financial side of things, and then I'll tell you my opinion what I would do if I was in your shoes, but definitely not financial advice. If you like this type of content, please like the video. Okay, it really genuinely helps the channel and it takes about 3 seconds to do it. So just go ahead and just click that button for me. It really helps the channel. Thank you so much. Right, so the company we're talking about today is Albemarle. Ticker symbol ALB. This company is a chemical company. So one of the things I normally tend to do is I didn't know much about the company, so I knew they were in the chemical side of things. I already own an air product chemicals. I already own PPG, so I wasn't really interested, but I knew about the company and I knew the fact that in 2020, when everything was going to the moon, and the fact that this company obviously has lithium products, and Tesla was going to the moon, and obviously they deal with the battery side of things, this company was doing really well. So since then, I haven't actually looked at it. So today was basically, this week was the first time I actually looked into the company. So if I was in your shoes and you're interested in the company, go to their website, go to the investor relations section, and then you've got loads of things here. You've got the presentations, the webcast, and you basically earnings releases. You've got the full financial details in there. You've got a little bit of information about the company. You've got these presentations that you can download as well that they've done in December 2022. You can understand, you can get basically a feel of what the company does by just doing this. Okay, and these are definitely a recommendation for you to do this because it is important. Don't just rely on something that you've just seen on this video or something you've read in one website. Go to their website. So the latest earnings report I think came up in November, and it has a lot of information. So it kind of gives you the background, the forward-looking statement, where the CEO will talk about the company, where they are and so on, the non-GAAP financial measures and so on. And then it gives you the overview from free cash flow to EBITDA growth and so on. So it will tell you basically how much they made in Q3 of 2020. So that's the Q3 2022, how much it was up, EBITDA, how much it was up, and then so and so. Okay, they also give you the overview from the net sales perspective. So Q3 this year in comparison to Q3 in 2021 is absolutely huge, from 831 million to right now $2 billion. So that's up 152%. So these are the kind of things they will basically present. Obviously, you're going to have to then look at other websites, but this is basically correct information. And I say correct because this is what they report to the SEC, the regulators, to make sure that they're compliant and the company is doing well and so on. So they can't lie about these things. Obviously, they can financially manufacture certain things, but obviously they can't lie about the majority of the numbers and so on. Okay, there are accounting tricks that they're allowed to do, but not obviously lie about these things. Okay. And then the guidance actually 2022, they revised it from 7.1 billion to 7.5 billion. That's what they said initially. Then the revised was 7.1 billion to 7.4 billion. So they reduced it slightly, not by much, okay? But then it's still up about 115 to 125. So it is still quite up. So there's a lot of information in there that you can actually dig yourself into and then find out in terms of growth, in terms of where the company is, the product they sell, who they sell to, and countries they basically work with, material side of things, royalties, energy. So any sector that they're in, you can learn more about that. Okay, and if you work in that industry, basically is that you've even got advantage over people like me because I genuinely don't know much about this industry. Okay, based on the research that I've done, okay, I know their main product is lithium, and that is probably the one selling point that they've got. But I'm sure they have other products that are doing really well, and that's obviously your job if you're really interested in the company to actually look at it. So I'm just kind of giving you an idea where to start with, what to start with basically. So Let's now have a look at the general information. Okay, like I said, with this company, lithium is basically one of the main products, and according to Seeking Alpha, and not Seeking Alpha, Morningstar, it says our outlook for robust lithium demand is predicted upon increased demand for electric vehicle batteries. And I think that's the most important thing. If the EV cars continue to demand, and now there's like a shop basically right now, Tesla is not doing well, NIO is not doing well, they kind of basically cutting productions and so on. But if that continues, okay, I think this company will basically benefit from that. And a lot of it, their actual products is actually in China, so they have a loads of bases in China, and if these Chinese companies actually producing this, they're going to need a product that this company creates. So like I said, it's in the basic material, company name, Albemarle Corporations, and current price is $214 per share. They have EPS, okay, so they have a positive earnings, which is absolutely amazing, okay. They've been around for a while, so you would expect that. $13.19, and then a market cap of $25 billion. So they're not really a huge company, okay. They have a wide, narrow economic moat, and they have a beta that's quite basically high. So we're normally looking for anything below 1, because that means they're not too volatile, if you like. PE is quite low, 16, okay. Forward PE is even better, but price to free cash flow is actually quite, basically based on that, it's quite expensive. And I will show you why that is. And the sector, the material sector, the basic materials sector is actually 19 PE right now. So in terms of dividend yield, okay, we just go below 1%. Latest increase was about 1%, and the 5-year growth rate was 5%. Dividend growth streak, okay, is 27 years in a row. So they have increased that for 27 years, and believe me, that's a bit crazy, isn't it? Just to increase it 27 years, and it's still 1%. But obviously, it depends on the actual price of the stock itself. Okay, the stock goes up, the yield comes down, if you like. And payout ratio right now is about 11%, and dividend safety 99%. Free cash flow, this is where the problem starts. Free cash flow right now is negative. Okay. And it has been negative for a while. So if you look at Yahoo Finance, okay, from 153 to 152 to 51 to 600 to now 307 minus all of that. So it is basically, it has been negative for the last 5 years. So it makes me wonder, how is this company then? They must be using a lot of their net income to pay this dividend. I would have loved if this company did not pay any dividend and focus on growing the business. And now they've been around for a while, but this makes no sense to pay 1%, but you don't have any free cash right now. So they must be using all their net income. Okay, that's money after they pay taxes and all of that stuff, right? To pay the dividends and have absolutely nothing left for the business, which is ridiculously crazy, especially in this climate where things are not great. And if the revenue comes down, okay, then they're going to have to cut this dividend. I would definitely, if I was the management, get rid of it, focus on growth, build some free cash, then basically reinstate the dividends if that was the case. But profit margins is absolutely amazing. I think this is what's attracting people to this business, I guess. Profit margin of 20, almost 8%, 28%, 29% operating margins. Return on equity is perfect, 25% or more. Total return in the last 10 years about a decent 14%, and current ratio is above 1. So they do have enough to actually current assets, okay, assets that they can liquidate in the next 12 months to pay off any liabilities. Basically, that's what it is. Okay, so that's important to remember that. But in terms of valuation, this is where basically, this is the reason why people are basically crazy about this company. Because if you look at it next year, it's expected to grow 37%. According to Yahoo Finance. This is estimation, by the way, remember that, and I'll show you in a second in a bit more information on that. Growth estimates for the next 5 years per year, they're expecting 77%. That's mad. So for this reason, I think that's why the stock is where it is right now, and the fact that they should get rid of this. If this is more, to me, this is more growth business than actually a dividend stock company, if you like. Okay, some dividend stock companies are actually obviously growth side, but this is growing really fast. But the fact that they don't have a free cash flow, that worries me a little bit. So current price $214 per share. According to Simply Wall Street, they're expecting 293. So that's 27% undervalued at the moment, according to them. Morningstar is more or less the same, right? So $350 per share, and Morningstar is saying it's about 40% discount right now. TipRank is actually saying 288, and that's almost a 35% upside. Now I've included another one, Seeking Alpha, which I'll share with you guys in a second. Average price target, basically expecting 314. This is the analyst, not the website itself. So all the analysts that are on that website, or basically that are talking about, there's a Wall Street analyst. Basically, this comes from Wall Street. This one here comes from Wall Street analyst. This comes from Wall Street analyst as well. So 47% almost upside, and according to Seeking Alpha, the Wall Street analyst actually saying it is a buy. So that's probably one of the reasons why the stock has gone up so much. Another thing that I don't like about the business right now is the fact that they're actually issuing more shares. So this is probably why they actually still paying dividend, because they probably basically diluting your own shares and using that money to pay you back dividends, which makes zero sense. I'll be honest with you, get rid of the dividend, stop diluting the shares, okay, and then focus on the building that cash flow. And that's what I would have done. I'm not a financial analyst, but it makes sense, right? Why are you basically diluting the shares when you're paying the customers, like your shareholders, a dividends? Get rid of the dividends, okay, and focus on this. Just to basically bring this down if you can, and then stop paying as dividend. Okay, but the growth in terms of sales, you can see, is going massively upside. Okay, so from 2.5 to right now $5.6 dollars. So it is actually generally a growth business in my opinion, but they need to make sure they focus in more on the getting rid of that dividend. So in terms of total revenue, we're looking at right now in the last 10 years, basically 2.5 billion to right now 5.5 billion. Okay, so that is actually good. In terms of net income, okay, from 300 million to right now 1.5 billion. So that 1.5 billion, that's probably what they're using to pay the dividends. Stop that and put that into pay off that, basically, and have actually free cash flow. That's what I would have done, right? So the other thing I want to show you is in terms of ratings. Okay, so this is quant rating. So this is, I'm using now Seeking Alpha. This is the website. They have their own valuation software that allows us to tell us what basically the company they think about the business. So ratings from all three, the authors, so the Seeking Alpha authors, people that actually contribute it, is a massive website. Wall Street, and then Quant, their own website. All of them are saying is a buy right now. Okay, so as you can see, 5 is the highest, but as you can see here, 3.6, 3.83, 4.3. So the fact that this website is actually quite strict, quant ratings, they're actually quite strict, but the fact that they're saying 4.03 is actually quite good. And Wall Street valuations, as you can see here, they're strong, 10 strong buys, 3 buys, 9 hold, 1 sell, and 1 strong sell. So that's basically where they are, and it's a buy still. 3.83 is basically their rating. In terms of growth, okay, and this is where it gets important. Okay, so we're looking at a couple of things here. In fact, what I'm after is the annual estimate summary. What I'm after is, I'll show you in a second. Is this bit here. So this is the EPS, okay, earnings per share, the consensus. This is estimation. This is not factual. Okay, so this is what the analysts actually, after they've done their research, after they've done calculations, this is what they came up with. So 2022, this year, they're expecting basically the earnings basically to be about $21, right? So that's a massive growth of 420 year-on-year growth. Okay, December 2023, they're expecting it to be 28, so that's about 34% upside. 2024 is they're expecting it to come down a bit. Okay, and this is important. So 22 people have actually done this analysis. The next year, 2023, was about 21 people. So that, I will say, is a good size number. And on average, I would expect 10 or more analysts to look at this. But everything that's 5 or either 1, I'll just ignore it for now, because 2024, 5, only Allah knows what might happen by then. But so they are saying they will be, these 12 people have actually come together and said the earnings would be 26.46, okay, average basically, and it will be minus the growth. There will be no growth that year. It will be minus 6.18 if you like, okay. So that's the EPS. In terms of revenue, it's almost the same as well, okay. 7.3, that's a massive growth. 21 people, 21, 14 and 5, okay. So we look at the first 3 if you like. Then 9.98 billion, so that's about 36% growth. And then the following year, 2024, we're looking at about 9.68, which is about 3%, negative 3%. Okay, so that is basically what the analysts are saying. So there are situations where it will be up, and then it will be down, and then it will be up, and then it will be down, and so on. So I just generally, this one person, I wouldn't even look at that section because that makes no sense. Okay, so there you have it. That's the company. I'm sure that's the company that you've asked me to look at. There's a lot of moving parts what you need to look at when you're analyzing a company like this. Okay, but to me, the one thing that really worries me about this company is this part here. Okay, the free cash flow here, and the fact that they pay dividend. If there was no dividends, they have free, basically negative free cash flow, at least in a couple of quarters. After a couple of quarters, they could potentially be in the positive. But the fact that they're paying that dividend, I don't know that how are they financing that dividend is probably through the outstanding shares, because as you can see, this is growing year after year, which is not a good idea for a company like this to do. Okay, so there you go. There you have it. This is my opinion. Would I actually add this to my portfolio? It seems interesting because from the growth side of things, if they were not paying dividend, I would have actually liked it. But if they stop pay, a lot of people will basically get into this company because of the dividend. If they cut the dividend, then the stock is going to tank, and that's my worry. So I wouldn't touch it personally right now. Okay, I'll be on the sideline watching out from the outset. But if it keeps going down, okay, with the rest of the markets, and then hopefully they cut that stupid dividend, or they actually have a positive cash flow, then I might start looking at it. That is what basically makes me worry about this company. Other than that, it should be fine. I hope you enjoyed the video. If you're still here, please like the video. Let me know if you have any questions. Assalamu Alaikum.